Hej och välkomna alla till Erik Penser Bank. Jag som är här och pratar heter Igor Tubic och med oss idag så har vi STRAX och Gudmundur som ska berätta lite om bolaget helt enkelt. Gudmundur, we're welcome.
Thank you very much, Igor.
Nice to have you here.
Likewise.
I would like to start to talk a little bit about if you can give us a short introduction about STRAX and the history and how it has developed so far.
Yeah, so STRAX has been around for quite a long time. The company was founded back in 1986 and we have evolved a lot since the beginning as times have changed. So when we started out, mobile phones were not or hardly in existence. They were sort of starting to come off in those days, and now we do accessories for mobile phones. So you can just imagine the business plan has changed. And we've also, what's worth mentioning, we've survived several bubbles that have burst and crises. So we survived the tech bubble that burst in 2001. We survived the credit crisis and the credit crunch in 2008, which was not comfortable because we were funded by one of the banks that went bankrupt, Landsbanki, and it was not something we prepare for. It is to have your financial institution go out of business. But at least we've shown sort of a great ability to evolve and grow at the same time. And I think we're just very proud of the fact that we are still in business 25 years later and thriving actually today. And again, sort of the third thing you can talk about in terms of market disruption and being still here is obviously COVID. And sort of COVID in itself, and maybe difficult for Swedes to understand the impact of COVID on businesses in Europe and the US and elsewhere, where there have been sort of restrictions and lockdowns. We recently looked at the European markets we operate in and tried to sort of assess the impact of lockdowns on our business. And Sweden, 0 lockdowns in the last year and a half. Germany has had 218 days where stores have been closed. UK has had 213 days where stores have been closed. And our brands and our products are sold in regular retail. And even in May and June of 2020, I believe 80% of the doors that we serve, which globally is probably 75,000 doors, 80% of those doors were closed. So we, again, ability to sort of be quick in changing and adapting to disruptions that nobody foresees or other disruptions that happen over a period of time. So again, very proud of the fact that we've been around for 25 years and stronger than ever right now.
Mm. And what would you say makes your business that flexible that you could survive those crises that you have had during looking back?
I believe it's sort of when the pandemic hit, this was not our first rodeo, if you will, not the first time that we have to react quickly to unforeseen circumstance like we did in the banking or credit crisis back in 2008. Mm-hmm. So we've always been, I would say, agile and relatively lean on OPEX. And I think adaptability is probably a good word also to describe STRAX. We have changed our business model several times in the last 20 years, obviously. So we started out as a trading business. We went into distribution. We later became a sort of own brand developer. We've acquired brands, we've sold brands. We are now an integrated distributor and a brand owner. So we've always been sort of fairly quick and good at sort of reacting and preempting changes. Mm. And I think that sort of more or less defines what we are today.
Mm-hmm. And do you foresee now that your business model is going to change going forward as well, or do you believe that you will manage this COVID crisis and get out stronger, so to speak?
No, we definitely will come out of the COVID stronger. Mm. So last year, you can just imagine our accessory business, our core business, was down more than 20% in 2020. And we didn't expect these lockdowns or market disruption coming out of COVID to last into 2021. But still, they were haunting us even into sort of the third quarter. And it's impossible for me to say that a year from now, we're going to look exactly the same we are today. Things are changing so rapidly. The M&A market in our industry is very active on distribution side, on brand side. So we have to be a part of the game, if you will, at the same time run sort of a stable, predictable business. But it's not always predictable. That's a challenge. But I would love to be here a year from now and say, yeah, whatever I told you a year ago has materialized. But unfortunately, in reality, that doesn't really happen.
I see. And on the topic that you mentioned before here, around that a lot of stores has been closed, what have you learned from that, and how do you foresee that you're going to change and move more to the online space from the retail stores, or do you believe that people will come back and still buy from the retail stores going forward?
Traditional brick and mortar retail is not dead. It's been hurting, and we've seen sort of numbers out of the US, sort of the stickiness of the channel shift over to online. And so numbers anywhere from 20 to 40% of that shift will stick. But a big part of it, the majority of it, will come back to retail. When consumers didn't have a choice, they had to go online if they wanted to buy. Now they have a choice again, luckily. Retail is changing, and we have to acknowledge that. And we have to improve our online presence. And we do that through sort of several different ways. And I've frequently said, growing online sales is extremely easy if you don't have to think about your profitability. If you want to do it profitably, it's extremely difficult. But we have to, sort of, we look at online in sort of 3 different channels. You have sort of your own direct web shops, like on urbanista.com or richmondandfinns.com, etc. Then you have the traditional brick and mortar retailers that all are trying to improve their online business. And we've not been focusing on that, but we definitely should, because they drive traffic still, or footfall to their stores, or traffic eyeballs in the case of online. And we have to provide them with content, and we have to invest in their marketing sort of expenditure. And we haven't really done that, but we've seen where we have, and many retailers today, before they let you come in store, physical store, you have to prove that the brand or the products are selling through online. So again, investing in that channel, which we call indirect e-com. And then the third one being marketplaces, and we do great marketplace business in Asia and elsewhere. Amazon is tough, but that's a channel that we have to still be on. Amazon is such a dominant player, and then the marketplaces you have in China, Amazon doesn't exist in China, so you have JD and Tmall, and all of these collectively, these 3 different channels, we acknowledge, and we've stated before, that we will have to generate more than 50% of our sales through e-com. And that is sort of to reduce the dependency on brick and mortar retail, which is under pressure. We all know that. So online improvements is something we have to be stronger at. So the other type of channels that we are focusing a lot on is also enterprise customers. When we go into the larger B2B enterprises and we provide them with a screen protection or a case or a headphone, etc. That's a channel we've been developing a lot in Europe in particular in the last 2 years. And that, if you look at a distribution business, if you sort of split STRAX into 2 businesses, on one hand you have distribution, which is traditional distribution with a centralized warehouse in Germany. That has held out very strong throughout the pandemic. Fairly stable. Of course, we've seen sales decline, but profitability has held up. That's primarily because of the enterprise business. Okay. So they've been able to set off part of the drop in retail business with enterprise increase and growth in enterprise sales.
Mm-hmm. And can you elaborate a little bit more about your online strategy, because you have quite ambitious plans to have 50% of your sales through the online, and can you tell us what's required from you to drive traffic to your online channel, or to invest in, what kind of investments do you have to do in order to drive traffic to the online space, so to speak, and make it still profitable?
I think that's the $1 million question.
Oh, okay. Of course.
And we don't have the $1 million answer. Otherwise, okay, we probably wouldn't be sitting here. We really haven't figured it out. We've unfortunately been quite heavily loss-making. It has had negative impact on our margins We drive negative margins in e-com. We haven't figured it out. And when I say e-com here, I'm primarily referring to the direct-to-consumer websites we own and operate, where you really, through performance-based marketing, have to drive traffic through your sites. That is not a profitable business for us. And we've actually scaled back significantly on spend just because we haven't been profitable. And ad costs have probably tripled in the last year and a half. What really happened was sort of when traditional retail closed, all the L shops of the world, they had to invest in e-com. They were willing to pay a lot to drive traffic, and they outspent sort of us by a country mile in terms of the spent overall spent, as well as sort of the price per click. And again, we're trying just to figure out how can we do this profitably, because at the end of the day, we are as a consolidated business, we are judged on the profits we generate. We're not judged on sales growth, unfortunately, and that's what we have to keep in mind at all times. So that's why also we are sort of spending and analyzing further how can we improve this indirect e-com through our partners. Our e-com sales will probably decline this year relative to last year. Our losses from that activity will probably increase. So that's why we simply had to scale back. We still will generate, I expect, 10-12% of our sales in these three sort of e-com channels we've identified, and there is a long way to go. And we are analyzing, studying, trying to figure this out. One thing that sort of we have high hopes for is we have launched now a digital native brand, Dottir, which we did announce last week. And the dynamics will be completely different when you have a brand like Dottir, where you have already 2 brand ambassadors that have massive following on Instagram. So the 2 brand ambassadors are CrossFit superstars, basically. And collectively, they have 3.2 million or 3.3 million followers on Instagram. I think they have 1 million followers on Facebook. And they are the ones that will advocate and drive the brand, sort of initially to the CrossFit community. And the reason why we have access to this community to drive traffic and hopefully convert on the site. And number 2, what we frequently run into with our other brands that are sold in traditional retail as well as online is pricing. If you do, and pricing is so transparent globally these days, if you run a campaign on, again, using Urbanista as an example, you run a 30% off campaign in Urbanista. Within an hour, a customer in the US will have identified that you're running a campaign. They want to participate. Also, when you do sort of broad distribution, it is very common that your product end up on Amazon without you having any control, which also drives price down. And that's what makes the online space so challenging for offline brands or distributed brands. When it comes again to Dottir, it will only be sold online. It will only be sold online by us. So we will have full control over the channels and distribution strategy, promotional strategy, etc. So that's a huge test for us. Can we do e-com profitably? We have other sort of brands similar in the making, hopefully making some announcements soon, where we will have more digital native brands, and extremely excited to see how we can scale up these brands.
And do you see any possibility to do the same with your current brands, you know, collaborate with some big names or such like that, stuff like that, in order to drive traffic and try to take control for example, like Urbanista, Clicker and stuff like that? Or do you plan to only do that with new brands?
It comes down to economics. It is expensive to retain a influencer. And it's also hard often to get a positive ROI. I'm sure a lot of people, influencers in particular, will disagree with me, but that's a fact. There are some that drive positive ROIs, majority of them don't. If you find a sort of hidden jewel, of course you have to try to sort of capitalize on that asset or spokesperson or ambassador, whatever you call them. But it's again also becoming increasingly more difficult. So the reason why, again, we fell into this dotted story and why we were able to engage with these two CrossFit athletes is that one of them went to school with an employee of STRAX, and they were just sitting and chatting over a cup of coffee. So what do you want to do next? And this sort of evolved as a concept and into a product in sort of, it's a personalized audio, obviously true wireless headset that sort of targeting extreme athletes because it's fully waterproof. You can even submerge it in water and it should function. It will function. And so that was how this concept and idea was really born, just over a cup of coffee. And I'm not sure how much they charge, these two athletes, if you would want them to post something on their Instagram, but it's a significant amount of money.
I can imagine that.
So Catherine Davidsdottir, both of them have won the fittest woman on the earth twice. And this Catherine Davidsdottir, who's one of the two athletes, she is on the top 50 most marketable athletes globally. And you have there sort of Ronaldo, Messi, and these kind of calibers on that list. And I think she was number 45 last year. So it was super strong following. And we're very excited about the potential of the brand.
Okay, very interesting. And can you tell us something about how you are planning to develop and drive further growth in your current own brands, like Urbanista, Richmond and Finch? You know, what's your plan to develop those brands to,
Increased distribution is key. You have to be strong on your product development, on your sort of roadmap. And again, Urbanista, the Los Angeles product, which we will now bring to market in October, has been delayed for various. It's a challenging technical product. It's a world's first solar charging or chargeable headsets or headphones, true wireless. Just to give you an idea, sort of the exposure we got, or Urbanista got, there were 1.3 billion impressions online in sort of the days following the announcement.
Okay.
So that's pretty impressive.
Yeah.
That's pretty impressive. And we have more sort of products in store along that sort of sustainability angle on Urbanista. And I think the roadmap and the whole sort of product portfolio is looking quite strong. We need retail to open. If you think about the sort of economics again on Urbanista and how do we grow, when we launched the true wireless product Stockholm, which was the first true wireless product that Urbanista sold back in 2019, we sold, I believe, 400,000 units. And Urbanista generated a top line of, I think, 23 or 24 million euros. And then having sort of 2 down years due to the pandemic. If you would sell 100,000 Los Angeles products, that in itself is in excess of 10 million euros in sales. So the numbers add up quickly, but we need retail. We need to secure more listings for Urbanista in sort of the big players in retail. And when I say big players, I'm talking about sort of the AT&Ts of the world, the Verizons of the world, the Best Buys of the world, all US retail where we have great relationships and we have products already in those retailers. And we're trying sort of to prove that Urbanista should be on those shelves as well. And the same with our other brands. We just need to increase the distribution and continue to be strong sort of in terms of the product development and on the quality side. So. There is no secret to it. If you look at sort of one of the strengths of STRAX, we sell products already in 75,000 doors. We don't sell every single product or every single brand, but we have products in over 75,000 doors. So it adds up pretty quickly. We just need to increase the distribution of more brands and more products into those retail point of sales, and obviously improve our enterprise business and online business at the same time. There are no secrets. You just have to be on top of your game and ensure that you deliver quality products at the right time at the right price point.
And if we look backward on like Urbanista, for example, how often have you launched new products within the Urbanista space during a year or during 2 years, and how is your plan going forward?
Yeah, I believe, I don't have the exact number, but sort of looking back, we probably averaged anywhere between 3 and 4 products per year. And they usually go hand in hand. There are sort of 2 major trade fairs in our industry. So you have the Consumer Electronics Show in January in Las Vegas, which is the biggest sort of show globally. There we've usually launched new products on Urbanista and also the other brands. And then in September you have a show called IFA in Berlin. And launches and product introductions have usually coincided with these 2 trade fairs. And we sort of on Urbanista have been probably averaging 1 to 3 products probably in terms of introducing new products at these trade fairs. Yeah, so Urbanista is more complicated than Richmond and Finns. There we come out with new collections that coincide with iPhone launches, that coincide with seasons. So that's more frequent, and it sort of carries significantly less investments in terms of research and development.
I mean, we have talked a lot about the headphones market right now. Do you see that that's going to be the main driver of STRAX sales going forward, or how do you see the different categories of your portfolio?
Unfortunately, in our industry, there are not many analyst companies tracking accessories. Accessories are really a subset of smartphone sales, and there is a correlation between number of smartphones sold and accessories being sold. Not one-to-one, but there's a pretty sort of significant correlation. And the smartphone industry last year declined by probably 10%. Accessories probably declined more. But if you look at the personal audio side of things, true wireless, significantly better coverage, primarily because Apple is there. That's why analysts take interest. But volume-wise, I believe the accessory business globally, collectively, if you add power and protection and other accessories, the size is probably similar, if not bigger, than true wireless. I've seen a recent industry report on expected growth rates in personal audio for the next 6 years. The CAGR is almost 15% over the next almost 6 years. So that's of course you want to be in a market that's growing. But we've also seen strong indication on the accessory side from less reliable sources, unfortunately. But we see, or we expect mobile or smartphones to grow this year, probably by anywhere between 8 and 12%. Apple driving that. Obviously, we've seen sort of positive response by the market on the iPhone 13, which drives a lot of accessory sales. And sort of we are on the accessory side of this, in a growing market. And on the personal audio side, most definitely in a growing market.
And on that, I mean, around the Urbanista, who is a typical Urbanista customer? What, you know, is it like people in the 20 years of age, or 40, 50, or who is the typical Urbanista customer, would you say? No,
I think the demographic, typical target consumer for Urbanista is somebody in their 20s, early 30s. And I think that's the group that the brand caters to as well. Other brands have obviously different consumer in mind and target them differently. But the typical Urbanista is anywhere from 20, early 20s to sort of mid to late 30s.
And for the new brand, Dottir, I believe that's going to be more into the sports and fitness than targeted, or would you say that's even more broadened? Or
coming back to why we are so excited about Dottir is CrossFit as a sport is an extremely fast-growing sport globally. CrossFit the name CrossFit is owned by a business in the US, and they operate a licensing model. So you have 11,000 CrossFit gyms globally. This is a top 10 franchise globally with the McDonald's of the world, Starbucks, etc. Unbelievably successful. And of course, we're targeting this community. And it's an expensive sport, so most participants are quite affluent. And that's the target group initially, along with sort of sports enthusiasts. And again, this is the target demographic we're going to go after.
Okay, I see. And going back a little bit, you said before here that you are planning to launch even more brands. Are you planning to you know, focus more on launching new brands by yourself, or are you planning to do any acquisitions as well going forward? What's you know, your thoughts around that?
I don't believe there's a gap in our portfolio today. But the market is active, both on the brand side as well as on the distribution side. We've seen probably this year alone in our sort of core industry, probably anywhere between 5 and 10 transactions. And we're participants, but I don't see any gaps in our portfolio. And that's also sort of when we launch these new brands, we frequently get the question, how can you launch a new audio brand? Why don't you just transition Urbanista to sports? We do have a sports headset in Urbanista, but it's a completely different sort of proposition and a completely different target customer. And we try as much as we can not to have our brand cannibalize each other. So we try to go after a different target group, and I think we've done that with Dotted. But in terms, again, on the brands buy side, sell side, we're in the market. But again, reiterating that I don't see a gap in our portfolio.
Okay, and can we talk a little bit about your strong relationships with your suppliers? Because from my perspective, that makes you very flexible, and like when you launched the PPE products, you were able to, you know, you had a good relationship with your suppliers, and then you transferred and started to sell the PPE products as well. How long does it take for you to know from the idea of launching a new brand until having it start to sell, so to speak?
It's a little bit more complicated to launch a brand than just calling up a supplier in China and asking them to produce for you. We do rigorous audits on all of our suppliers. We have rigorous quality assurance and quality control sort of standards and mechanisms we implement in our supplier base. But you have to remember that STRAX has been doing business in China since 1997. We've had an organization in Hong Kong and China for now over 20 years. So we have long-term relationships. We nevertheless, on a regular basis, we look outside of our supplier base. So the key differentiator for us launching PPE products quickly was the fact that we had people on the ground in China. So they could verify certifications, they could verify shipments before they were shipped. We were dealing quickly with the United Nations as an example, and you can rest assured that they have a quite stringent quality procedures that we had to ensure that certifications and everything was sort of intact, and in fact what was stated on an invoice that there was a lot of fraud in that sort of panic situation that was just created quickly sort of after the pandemic hit the shores in the Western world. But again, having sort of an organization and an infrastructure already in place made all the difference for us, and sort of allowed us to quickly sort of shift a part of our resources over to a product that was in significant high demand. So this pivoting, it took an effort, but we were very quick to learn sort of the key KPIs, if you will, in the PPE world and relationships, etc.
And on that topic, have you faced any problems with the suppliers in terms of taking the product from China to Germany, or how does that work? Or have the products been delivered to you as in the size that you wanted, or do you see any problems on that in that space, so to speak, going forward?
No, of course. There are problems in lots of places. We just try to minimize these and sort of mitigate any risk that is associated with such an issue. But there have been governments around the world were screwed out of billions of whatever currency you use, and we, in a couple of instances, bought products that were not up to spec, or not sort of the specifications that were indicated and sort of stated, they didn't hold up. Whether that was a forged certificate or forged certification, we had those issues. On top of that, and still to this day, the global supply chain has been a nightmare. After the pandemic, we've seen freight charges probably increase anywhere between 4 and 5 times. And now in China, the latest in China was the energy crisis in China, where they're just shutting down factories, allowing them to produce on maybe 2 days a week, 3 days a week, and only on certain hours. That's impacting. There's a global shortage of containers. Shipping ports in China have been shut when there are cases of COVID, so we've had all sorts of issues. But we've been able to manage and steer around these to this date, and I expect us to be able to do that going forward as well. But there are daily challenges in our business and every business. That's just
But you said something that was quite interesting. What STRAX stands for in Iceland? That was
yeah, STRAX means in it's not the same meaning as in Swedish. STRAX in Icelandic means now, or immediately. So if you do something STRAX, you do it now, not later. And I think that's sort of true, and that's how we've operated since day one. We've been quick when we have to, and again, we're STRAX.
No, that's quite impressive. It's your identity, right? And looking forward here, what would you say are your key focus areas the next 12 to 36 months, so to say? Would it be, focus even more on online channel, or what's your key bullets or key points you are focusing on in the short term?
I think we have to improve in multiple areas. One of which is e-com, and I mean sort of the 3 different channels we've identified. We have this target of 50%, as we talked about, of our sales coming from e-com within the next 2 to 3 years, and that's a big sort of focus area for us right now. I think we're also trying to sort of prepare for full sort of speed when retail is normalized, whatever that means, but it's not completely normalized across every single market. It's getting there, but it's not sort of everywhere at the sort of pre-pandemic level. So we have to prepare the organization for that when that happens, and I think we're on a pretty good way. And we have to ensure that we get sort of our brands in front of the buyers of the larger customers. Just to give you an idea, AT&T in the US has close to 5,000 stores. Targeting on AT&T over, let's say, a Nordic-based retailer, maybe with 30 stores, big retailer, don't get me wrong, but the scale is just so different when you go into those larger markets, and that's, of course, a big focus area for us.
Okay, I see. Gumi, thanks for coming here. It was a pleasure to meet you again. Och tack så mycket för att ni kollade. På återseende.
Thank you very much.